Hello guys, welcome back to Pips and Portfolio. Today we are going to review Friday's market, that is 21st November 2025. And if you've not watched my previous video, you should, where we talked about structure, liquidity, and candlestick confirmation. So we're going to use that same, whatever we talked about, we're going to apply it on Friday's market and see what we could have caught on Friday. If you've not subscribed, make sure you do, and make sure you hit the notification button so that whenever I release a new video, you can get it. So we're going to review the market, apply the concept here. That was on Friday, 21st November. And we'll be doing more of such videos, so make sure you follow, because maybe in every video you might learn something new. I might not be able to teach everything in one video, so with the recap or with the recaps that we'll be doing, you might learn something new from it. All right, so first of all, as I said, there are three things that you need before you take a trade, right? That's first of all, it's a market structure. So the market structure helps you to know the direction where the market is going, because you don't want to trade against the trend. So you want to trade where the market is going. So first of all, your market structure. Then the second thing is your key level. In our case, we use liquidity as our key level. Liquidity. And your last thing that you need, which is your confirmation and exits. Yeah, so these are the three things you need to take a trade. So let's talk about market structure first. Now, I've already talked a little bit. I think a little bit of it in the previous video. So yeah, so today we're just gonna apply it on the chart, how I would have marked my structures, and then how I would have come up with my key levels and all of that. Now we know what our key levels are. The two levels that we look at, which is the invalidation level. That's, for example, if I have something like this, it's in a downtrend, this is the invalidation level. Price comes, weak, it does not break it, and then so that's one of the places you can look for, one of the key levels we use. And the other one is the internal range liquidity, that is if you have something like this. Right, get out to zoom. So this internal range liquidity. So these are the two key levels that we look at. So we have only two major key levels. That's liquidity levels that we look at. And once price gets there, then you look at your confirmation, the candlestick confirmation entry, and then you exit. All right, so let's start at on the 15 minutes. We are using the 15 minutes today. So start of the day, as you can see, what I see is a break of structure to the downside. We had this sort of break of structure to the downside, break of structure to the downside, failure to create a low, came down again, another failure to create a low, and then break of structure to the upside. So this, we have a shift to the upside, so some sort of new structure here, break of structure to the downside. As you can see, came down, failure to create a low, and that led to the creation of a chalk. So at this point, I'm bullish again, break BOS to the upside, and I think this way. So when you have a BOS to the upside, now what is your key level? We have the invalidation, which we will use as our key level. So break of structure to the upside, so now we are bullish. So when price came to our key level, we expect it, if this is the invalidation, we expect price not to close above it, because if price, close below, yeah, because it's bullish. If price is to close below this level, then we have a change in trend. But since price failed to close above this level, that is a good signal. Candlestick confirmation, we have an engulfing here, a bullish engulfing, which suggests bullishness. So that's our confirmation to enter. Now, good normally love wick, so I'll put my entry or my limit order, my buy limit order at the wick, and my SL just below the wick. So your entry would be here, and your exit would be just below this wick, and you can target this high here, 2.3R. and that would have been your trade for Friday using this method. Simple like that. Right. Now, let me just, for the sake of those who like to, have TP1, TP2, I'd say TP1 would be just here. TP1 would be here. Because one thing you should know is gold loves its wicks negatively. So you can have situations where price would move, tap into the wick, and then decide to go down. Yeah, so safety, you can take your TP before price gets taps into this wick, or you can take some partials out B and then hope that price eventually take all this out to continue the trend. So that's how simple and clean you can trade. I get me. So you mark our structure, and now mind you that whilst we were marking all of these things, we were looking at our key level. So just so that so for example, at this point when I price book structure to this point to mark this, because we had no internal range liquidity, we would have marked this level here as our level of liquidity. Price never came there and created new structures. Once price create new structures, you look at, so for example, in this case, price created a new break this structure here. So we had this sort of the invalidation, as you can see here, work it nicely, and then we continue downwards, created a new structure here. Now we look at this level here, created, we had a shift here. So now we are bullish. We're no longer looking at this levels here. Now we created another bullish structure here. So we're looking at this level which price broke, suggesting that a change of trend again. Went up, came down. Where at this point when we broke structure here, would have probably looked at this internal range liquidity, but as you can see what happened here, price failed to create a new low and then broke structure to the upside, suggesting bullishness. So in that case, we start looking for buys, shifter, and then we had a break of structure to the upside. We marked, because there's no internal range liquidity, we mark what? We mark the invalidation level which price came, and then that is where we had our buy signal from, and that is how we would have, or that's how we would have traded on Friday. So just simple things. You mark your structure to get your direction, then you mark your key levels, which is either internal range liquidity. If there's no internal range liquidity, then you mark the invalidation level. Now once you mark it, you wait for price to come there. If the invalidation level, price does not have to close below the level. If your wick is fine, that's a sweep, and then you get maybe an engulfing or an inside bar, then you can enter that trade, target the high, the swing high or swing low, depending on whether you're buying or selling, and then that's how you would frame your trades basically. All right, so this is gold, and just out of curiosity, I think I looked at it on the synthetic market. I just want to show it as well, and then we'll end this video. So this is, I'm going to 15 minutes. VIX10 1S. Yeah, this is VIX10 1S, and on the right pair. See, yes, right pair. So it's, let me see. All right, let me go to the M5. Show an example. Get this M5 on Saturday. So it's Sunday. I'm actually doing this video on a Sunday, so just go back to Saturday and then see what we have. All right. So so, yes, so you can see here from, let's focus on the story here. You can see we're sort of bearish here, break of structure to the downside. Probably we'll be looking at this internal range liquidity and the invalidation level. Any of these is fine, right? But on our way up, all right, maybe I might talk about this someday, but let me just talk about it. On our way up, sort of price failed to create new structures to the upside, came down, failed to create new structures to the downside, and then broke structure to the upside. Now immediately I see something like this, I know this is this is telling me a change of bias from, if we were, in this case we were bearish, so from bearish to bullish. I start switching my bias from bearish to bullish because we've sort of had this is you can see this is some sort of a chalk. Yes, so when I see something like the same thing, so if I have something like this, I'm looking for buys. Then where are my key levels? I know this is my invalidation. Sorry, that's my internal range liquidity. This is my invalidation anyway, and this itself is a zone, you know. So if should, you know, this hold, because we're already taking the liquidity, once we take out the liquidity, we watch for our confirmation, which we had here, an inside bar. So once we get an inside bar, this is my signal to enter. My stop loss is below this, and I can target the high, right? And that is how you would have caught this trade. So the same concept being applied here. Let's go to the 15 minutes and let's see, same on that side. You can see here, failure to create a high, break of structure to the downside. So we are bearish, right? When price came back, we have no internal range liquidity. So we use the invalidation level. Price created two bearish candles, which is a signal for us to enter. And you can enter your trade like that here. So just below, and you can target below 4.6 up. So yeah, so that's just the concept being applied again on this is synthetic indices fixed and oneness. I think it's really cool with this synthetic pair anyway. But so yes, so that's basically everything. So if you have any questions, you can put it in the comment section, and make sure if you're not subscribed, make sure you do, make sure you like, support the channel so that I can continue producing videos like that. And yeah, see you in the next video.